The Taiwanese index is up 1%.
Kotak Bank has done much better with respect to deposit momentum sequentially.
Charlie liked learning.
You basically need to take out the high one Friday, which is around just under 22,800 or so.
But Britannia, reported a weakish set of numbers.
A double upgrade from Morgan Stanley to overweight from underweight.
We're up 70 points. So 22,540 is where now things are settling in.
I think, we're seeing very robust response to good projects by credible developers.
So at a consolidated level, actually, we grew by 22% in this financial year.
Project loans toward real estate will get impacted with respect to provisioning.
The advance decline ratio is in favor of the declining stocks. So that's a bit disappointing, right?
11 out of 48 seats in Maharashtra are going to polls in this phase.
Midcaps are underperforming today. That index is down 330 points.
Well, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar, with me, Surbhi and Nigel. And that gap-up opening, right? That 70-point Nifty gap-up opening hasn't sustained. As we speak, the benchmark indices are in the red. The Nifty is below 22,450. It's not a big cut, down about 35-odd points, but you can see the market's sort of slowly trending lower and lower. And now it's below the 20-day moving average too. The mid and the small cap index are underperforming. The advanced decline ratio is fairly weak. 2:5 is a better way to put it. We've got about 650 stocks advancing, declining stocks at 1,700. And it's the PSUs, the banks, particularly the PSU banks, where we've seen the biggest knock. So the Nifty PSU Banking Index and the PSC Index is, bearing the brunt of today's selling pressure.
Well, it's an anticlimax, right? You woke up today, you thought it's going to be a great day. It had all the ingredients of being a good day. But from the first start itself, we did see some selling. And the markets have not really recovered. I mean, we're down only around 30 points. So you would say, well, that's par for the course. But from the high of the day, you've come off close to around 150 points odd on the Nifty. The Nifty Bank as well is still holding mildly in the green, but it's come off and the breadth of the market isn't great. And I wanted to point out the India VIX. A few sessions ago, that was at a 52-week low. Well, that one, in fact, now it's made a 52-week high in today's trading session. It went to closer to around 17. Ahead of elections, you normally see that the IVs on both sides will increase. And that's what's pushing the VIX up as well. So volatility is back in the system. And I think that's expected. But the kind of move that we've seen, see, today it's up close to around 38%. Pull up a month chart. You'll see that it breached that 10 mark. And from there, so it's up more than 55-60% from the recent lows. We'll get that. Yes, that's the chart that we're talking about. From around 10 a few sessions ago, that's seen a big spike up. So volatility is back in the system. And ahead of the general election verdict, you're expecting that to bob around. A few sessions ago, we saw a sharp decline of close to 20% in a single session. Now it's, in fact, spiked up from there. So big move on the volatility index would be.
Absolutely. I take that point on the VIX. And also, Nigel, this is the fourth consecutive session that we're doing the same thing, which is unable to hold on to our highs, which is why for technical watchers and bulls in general, this will start becoming a bit of a concern. The congestion zone around 22,780 thereabouts, basically near the recent all-time highs. Fourth day running that you have good cues or you have good momentum to begin with, and then it fizzles out. So it's not a great sign. It is consolidation still. I mean, we're not calling it a sell-off. Consolidation, but the bias, instead of being positive, the question is the bias now turning slightly negative? And mind you, this is happening without a major fall in banks. I mean, the bank Nifty, for what it's worth, is still technically, outperforming, though it's given up everything from the morning, and that was a disappointment. But there's no major slide in banks, at least as yet. It's just sort of stocks falling under their own weight. It's the same story like what we were telling you on Friday, Reliance, L&T, a lot of these big stocks not having the power to sort of, to head on. Luckily, on the FMCG side, the twin factors are balancing themselves out, not in terms of really stock price movement, but more in terms of sentiment. You have a Titan, which is sort of really standing out this quarter in terms of the disappointment. Stocks down 7.5%. But on the other side, you've got a Britannia, which is up 7%, which was not expected. I don't think anybody really on the street was expecting a 7-8% kind of an earnings move after Britannia's numbers. But that's exactly what happened, and we'll get into this as we go along. But overall, on the mid-cap market as well, I mean, things are muddling along. Talk about the index, it's down about, about 0.5%. Mid-cap index has consistently underperformed the large-cap indices right from the morning. And apart from the power financiers, and again, those are sort of RBI draft norms, we'll talk about that as we go forward. A lot of the PSU banking stocks are also under pressure because of the same rules that are being discussed right now, potential new rules when it comes to project financing. So these are some of the concern areas. But yeah, guys, I think I'll sort of watch out for this, because this not being able to hold the highs, this is becoming a bit of a pattern now.
All right, well, let's find out how do you position yourself in the final hour of trade. Rahul Mondar is back with us. Hi, Rahul. Good afternoon and good to see you win. Well, anticlimax, one would have to call it that. We are now at the low point of the day. The Nifty is down 50 points. The pain is in the broader markets. You have only 650 stocks that are advancing now. And you more than, the difference between the number of stocks declining in comparison to the number of stocks advancing is 1,100. So that's telling you the pain, and that's why your portfolio will not look too good. Your take, Rahul, how do you trade the index?
I think very well, summed up by, I was hearing you out, and as you see, the market breadth is a huge indication of the overall sentiment. And, one can't discount the fact that the market's also been observing that previous highs, as you mentioned, are not being taken out. It almost makes me think that is 22,800 getting to be some kind of a double top area where we topped out in April around that level. And, again, if you look at the previous trading session on Friday, there too, we had, a huge hurdle there and couldn't get past 22,800. So things are not looking good when I look at index heavyweights. So if I'm just a Nifty trader, my stance is presently negative. I don't expect the market to claw back in a hurry. And, just to put some levels to that, as I mentioned, 22,800, that's the key level from a slightly broader perspective. But just from a trading perspective, I would say that 22,550 can be used as your clear resistance in the near term. And I think we've already breached, levels of 22,420, which I was watching on the Nifty spot. So I think the next move down is headed towards 21,900 in my opinion. So I think the next leg seems to be down. And again, it's index heavyweights, which I would have on my sell list at this point in time. I think technology and banking may have a little bit of a different jig, but when I look at some of the majors, they look a little stubborn to me. And at this point, they can drag this index down.
Okay, let's get to the individual stocks. Then Godrej Properties reported Q4 numbers, with the company marking a 135% jump in their bookings. The company has also provided a strong guidance for FY25, targeting bookings at 27,000 crore. Okay.
I think,
I'll tell you what. We'll get to Sonal in just a bit, but I think Rahul would like to share some trading picks with us. Rahul, please go ahead, and then we'll get to the big mover of the day, Godrej Properties. Rahul.
Maybe start with my whole theme on the index getting a bit weak. Reliance Industries would be a sell, in my opinion, even at these levels closer to 2840, 2850. Worth looking at shorting this for a near-term target of 2790. But my bigger issue is, will 2790 break? And that would mean breaking into somewhat of a larger downtrend. So that would be a sell case. Keep a stop loss at 2890 when going short. HDFC Life, as we've all observed today, has breached to a new low, virtually, I won't say a 52-week one, but almost, niggling that point. I'd say that keep a stop loss above 575. The stock's headed for about 510 to 515 levels. On the buy side, both TCS and Infosys could be kind of safe havens. I'd say you could buy into a stock like Infosys, 1400 being a stop loss, 1455 would be a near-term target.
Rahul, anything on Titan? It's broken its 200-day moving average today of 34.26 with this large 7.5% fall. Is there further weakness in store for Titan?
Absolutely. I think, it's quite a mammoth of a fall, but when this breaks a level like 3,400, I think we're calling for a complete, change in the way I'm going to be looking at it, because this stock was holding 3,500 pretty solid, for the last couple of months. And that breaking means that we're heading to about 3,200 odd levels if you're just looking at the near term. But as I said, it could come to, technically, I'd have to re-rate this and look at this as sub 3,000. So I still think that fall is going to be stiff unless we claw back about 3,400 on a clear level. But let's also note that today's drop is not just a drop in price. It's also a huge volume surge. I think today's volumes alone, just the daily volumes, market's not even closed, would safely be probably the highest trading volumes we've seen in an entire year, if not more. So this clearly points to a down breakout, and one has to reassess this stock, and clearly comes into the bear zone tech.
Absolutely, that's a really important point on volumes as well. Massive move backed by massive volumes, so perhaps not a great sign. Rahul, will come back to you in some time, get more trades. I also want to talk to you about Britannia, actually, whether the converse, I don't know if at all it's true for Britannia, because we're seeing a big move on the upside on that stock, but that in a bit. Let's also analyze some numbers and some management commentary that's really propelling stocks higher. One of those stocks is Britannia. We'll get to that as well. The other one is Godrej Properties. Look at that, 10% surge right now. And that, just to recap, as Rima was earlier telling us, 135% jump in bookings in Q4, and the guidance for FY25 is bookings of 27,000 crore rupees, and the market has really loved that commentary. Let's get more perspective going with Sonal. Sonal, so it's been a strong year, and they're guiding for more strength?
They are, and that is what we analyzed on Friday, because numbers were out on Friday during market hours, and post that the management sounded very bullish as well, because of which brokerages are sounding very bullish on the stock as well. Let's start with Jefferies, where they have a buy call with a target price of 3,175 rupees a share. The strong cash flow performance is what drove this reduction in debt this time around, and that is what the street seems to like as well. The FY24 guidance has been well exceeded by around 61%, and disclosures on embedded profitability imply that the company trades at 17 times PE to FY25 pre-sales. JP Morgan has upgraded the stock to an overweight. They have increased the target to 3,100 rupees per share. They have upgraded it following company's FY24 beat in terms of pre-sales, and also following disclosures that its economic interest in new sales have increased substantially. The sales have grown 3 times in last 3 years itself, and Mumbai sale growth is an added positive as the company is finally capitalizing the home market opportunity, and they see this as a big growth trigger going forward as well. Motilal Oswal says that they believe the company will continue to surprise in growth, cash flows and margins as well. They also have gone ahead and upped their target to 3,000 rupees a share. They have a buy rating on the stock as well. In fact, we spoke to the management earlier today. Let's listen into what they had to say.
Well, yes, 3 times in 3 years on this larger base might be challenging, but I wouldn't put it, totally out of the realm of possibility. But of course, execution on this higher base will be much tougher. And we have to be aware that, this cycle may change, at least in some markets. So I think we have to be ready for all possibilities, and certainly sustaining the kind of growth rates we've seen in the recent past on this higher base will be challenging. But overall, we've guided that through the cycles, we would expect kind of 20% growth rates. And certainly we'd like to see at least that, say NCR and Bangalore. Those 2 markets, I think, have seen the most pricing growth over the last 1 or 2 years, as compared to somewhere like Maharashtra, where I think Mumbai and Pune have not seen the same kind of pricing growth. So it wouldn't surprise me if you saw kind of more moderate growth in NCR and Bangalore for a while, and you saw Maharashtra catching up a little bit. We are very confident that operating cash flows will grow rapidly. You mentioned the growth rate in bookings, but our operating cash flow growth rate over the last 4 years has been even faster.
All right, let's get a view on Godrej Properties. Then we have Deepak Mehta, Director, Alexa Equities, who joins us on the show. Hi, Deepak. Good afternoon. Good to see you in. What do you make of Godrej Properties? A bit of a flip-flop, but the street clearly likes what the management had to say, explains why that stock is the big outperformer today, up 10%. Your view?
Yeah, good afternoon, Nigel, and thank you for having me on your show. I think very positive commentary coming in. And what is the surprising part of Godrej Properties and a lot of other real estate companies is that when you're analyzing them quarter after quarter after quarter, their net asset value keeps on rising after every quarter because they're taking on more projects, or we're assuming a higher selling price. And that's the reason why, despite profits which are very volatile, the street is really valuing these companies on a net asset value basis. And even as we speak, Godrej Properties could be like 15-17% below its breakup value or net asset value. And I think some of it, of course, got covered today itself. But that's a surprising part, and the best way to play the real estate boom which is taking place is to companies like Godrej Properties. Also, another advantage of Godrej Properties is that they're pretty well spread out all over India, so they're not concentrated very heavily in any single market. And it's truly a pan-India player, unlike some of the other larger ones, including like DLF or Macrotech, which are focused on specific geographies. So very positive on Godrej Properties, but maybe at correction, there'll be some more margin of safety.
Okay, so you would prefer buying it at a correction, but Godrej Properties is one of the best. Volume growth has come in at 6%, higher than street expectation. Mangalam joins in. Mangalam.
Well, for Britannia, the thing is that it's you're looking at good demand going forward. As far as the numbers were concerned, nothing really to write home about, but that was something that the street was anticipating already. So just sale of products, the revenue was close to around 3% odd. Overall revenue grew by 1.1%. The EBITDA declined by about 2% and the next net profit declined by about 4% as well. What was positive, however, was the volume growth came in at 6%, which was at the higher end of the range of 4 to 6%. Secondly, the company has been doing a lot on its own back end as far as, trying to maximize growth and growth potential is concerned. The most important thing that they've done is, they've gone ahead and regained market share after price corrections and increasing their rural reach to about 30,000 distributors and overall direct reach to close to 2.8 million outlets as well. That's not all. They're seeding new categories and the stock started to rally immediately after the conference call. That's because, the first few management words of commentary came in and they were positive. The first thing they said was they're looking for growth, top line growth in FY25. And with, benign inflation and positive monsoon forecasts, there is hope of strong demand recovery. And with everything that the company has done in the past and also the route to market changes, all of that should result in higher than industry growth. In fact, the next competitor now has only 77% of the market share that Britannia has. Also, they have core states where they've opened factories. They're growing at around 2.4 times the average of the company. So the stock, having not done much over the last couple of years with strong concerns with regards to demand, any positive turn of events in outlook has the street excited, and that stock is surging on the back of that.
Okay, got that. I was just looking at volumes. 10-day average volumes for Britannia, 3,40,000, roughly 3.5 lakh. Today, volumes are 25 lakh plus. So that's the kind of interest on the stock. Mangalam, thanks very much for the details and explaining to us what the market perhaps has liked in that conference call. Let's take this to Deepan as well. Deepan, thanks for joining in. I guess this is, both Titan and Britannia really are the surprises, consumer surprises of Q4 so far, right? Perhaps nobody expected Titan to see such a drastic reaction and the commentary itself. And then there's Britannia on the flip side. What do you make of both?
See, Titan, very disappointing numbers, no doubt about it. And I thought that even the pre-quarter review was not as bad as the results have turned out to be. The compression of the margin, that's really the surprising part in Titan. And also new store openings also have slowed down. So, and also the management commentary is not all that enthusiastic. They are looking at a high degree of competitiveness for the rest of the year as well. And rising gold prices also does not help demand per se. So I think many headwinds in Titan, and maybe the stock could underperform for a few months or quarters or so. But look, it's a great company. And overall, the market for jewelry in organized sector is bound to grow as they gain market share. So I'm not looking at selling Titan as a disclosure. We and our clients own the stock. But I think we have to brace ourselves for slower growth for next 2-3 quarters or so. Britannia also, I know the management has spoken positively. But look, last few quarters, the numbers have been very disappointing. I suspect that the category has again reached a high degree of maturity and growth rates would be like typical low single digit going forward as well. Some amount of rural demand may come into play because of good monsoon. But looking at the valuations of Britannia, looking at the scope of increasing their revenues and volumes, and also considering that, they wanted to become a full service food company. And to that extent, they haven't succeeded. Brisket still remains the largest portion of their revenue. So looking at the entire picture, I'm not that positive on Britannia. And such, upswings are great opportunities to sell off Britannia and look at some of the other consumption-oriented stocks.
Oh, interesting. So you'd use the jump to exit Britannia, but you're not selling on Titan just yet. You're retaining your hold on that stock, but bracing for some more volatility, perhaps. Got it, Deepan. Just stay on. Since we're discussing Titan as well, we did catch up with the management earlier in the morning, where they really laid things out as they see them when it comes to margins, competitive intensity, and of course the impact that these high gold prices are having on consumer sentiment and demand. Take a look.
As far as jewelry margin is concerned, yes, two factors. Gold price volatility and actually spiking a lot during the year, almost 18 to 20% as of now. Gold prices have gone up. And the competitive intensity that we talked about, the existing jewelers are expanding aggressively. Many new players are coming in, and a lot of retail capacity has got created. And I'm sure demand, because of the gold price volatility also, is slightly slower to catch up. And whenever gold prices are volatile, consumer sentiment do get a bit beating till it stabilizes. So both these factors, I think, contributed. We wanted to prioritize over market gain share, the acquisition of new customers, over margin, and a lot of consumer offers and gold exchange programs were there during the quarter, which took some beating on the margin. As far as margin is concerned, I do expect that this competitive intensity would stay for 12 to 18 months for sure before some of the weaker players or some of the other players from where we are gaining the market share either exit or become further weak. 12 to 13%, I believe going forward, margin is going to gravitate more towards 12%. So the center of gravity is about 12% for next 1 to 2 years.
Okay, so that's about the consumption themes and Titan as well as Britannia. Deepan, I wanted your view though on Polycab. You know, in a market that's otherwise a little bit shaky or iffy, however way you want to put it, this one's gone ahead and made a fresh 52-week high. Now, if you pull up the last 6 months chart of the stock, you'll see it fell from around that 5,500 odd mark, fell all the way down to 3,800, and from there it's seen a big bounce. Deepan, you know, at around 4,500, when we do our morning chat, we had highlighted that technically it was breaking some crucial levels on the upside, and there was some delivery-based buying at around 4,200, 4,500 odd. Now, you know, that bad news has got bought into, and the stock has made a fresh high. What's your view at 5,900? It's quite tricky for investors, right? On one hand, you'll say don't tolerate any kind of corporate governance so-called issues with this income tax news that came out. On the other hand, it's a quality company with good amount of growth and tailwinds. How do you approach it at 5,900?
That's a difficult one to answer. I mean, so you move on, I think if you look at KEI Industries, another very good company, spectacular set of numbers, great value creator, and their position in extra high voltage cables, that's really driving the growth. They have a good export business as well. Checks a lot of boxes as compared to Polycab. And it's not that Polycab is available at attractive valuations or cheap multiples at this point of time. And again, in case of Polycab, they wanted to convert themselves to a complete FMEG company, means have fans and other electrical appliances, small electrical appliances, but they've not had much success over there. And it's predominantly a cable company. So when you look at the entire picture, I feel that within the cable space, there are better opportunities. I mean, look at Apar Industries, not exactly a cable company, but a conductor company. Similar variables playing out over there. I would prefer those sort of companies where there is more clarity and less uncertainty and valuation comfort as compared to Polycab.
Deepan, thank you very much for your time this afternoon. Great chatting with you on these stocks. We need to get into a short break. On the other side, we'll also invite Dinshaw Irani, CEO of Helios Mutual Fund. Stay tuned.
If they've sold Okay, the bulls are trying to put up some sort of a fight. There's a little bit of green back on the bank Nifty for one, and a couple of other stocks that are trying to bounce back. ONGC should be, up on the screen. It's trying to cut its losses down to just about 1% right now. And then a whole host of auto stocks are trying to bounce off the lows as well. We'll just get that up. A little bit of a technical glitch there, but ONGC is one. Tata Motors, Hero Moto and Bajaj are some of the other stocks which are trying to get off the lowest levels of the afternoon. Well, with that, let's move on and talk about the other big story that's impacted a large section of the market. I'm talking about power financiers like PFC, REC and IRDA, and also PSU banks. Many of them are down between 3, 4, 5%. RBI has proposed to tighten guidelines on provisioning for infra project financing. We have Ritu joining in with some more details on what this could mean. Ritu, in the morning, there was some confusion on whether this will apply only to projects that are seeing time overruns or whether this applies to all projects, fresh projects that lenders will be lending to. So what's the latest and, what's the feedback you're hearing from the industry?
Well, first, to be clear, this is still a draft circular on project finances where comments have been invited by the 15th of June, after which you should expect the final rules to be framed. It sets the floor for minimum exposure lenders can take, sets conditions for upgradation of NPA loans, and so on. But what seems to have spooked the industry most is the proposed higher provisioning and steeply higher at that. So first, the rules. Now, so far, RBI had said that if the date for commercial commencement of operations, which is DCCO, was extended by up to 2 years, banks will have to set aside 0.4% provisioning and NBFCs 0.25%. And if the DCCO was extended beyond 2 years, both banks and NBFCs were asked to set aside 5%. Now, these new draft rules propose that banks and NBFCs have to keep aside 5% provisioning right away from the construction phase itself, but this provisioning can come down to half if the project is operational, and it can further go down to 1% if certain other conditions are met on debt reduction and so on. Now, this 5% provision requirement also does not get implemented all at once, but in a phased manner until the end of FY27. Now, if the DCCO is deferred for more than 2 years for infra projects and for more than 1 year for non-infrastructure projects, the provision goes up further by 2.5% all the way to 7.5%. Again, this can be reversed once the project commences commercial operations. Now, importantly, RBI has proposed that these rules are going to be retrospective in nature, so all existing projects financed by banks and NBFCs also get impacted. So essentially, if you are a bank funding under construction projects, the provisioning charge goes away right up from 40 basis points currently to 5% in a phased manner. Now, banks and industry watchers we've been speaking to expect that these rules will only further tighten funding towards project finance. Some are calling it deal breaker, but the regulator's intent seems to be to build balance sheet buffers for project finances, which is inherently seen as more risky. But there is expected to be some pushback from the lenders. Some of the large banks we spoke to already said that they are going to take up this matter with RBI.
Okay, thank you very much for that. Abhishek is also joining in to talk about what brokerages are saying on this particular matter. Abhishek.
Well, IIFL Securities has written that they estimate additional provision requirement to be about 0.5 to 3% for banks' net worth, and that can hurt the CET1 ratio anywhere between 7 basis point to as high as 30 basis point. For infra NBFCs like REC, PFC, IRDA, etc., the impact should not be there on the ROE or return on equity. However, that can impact the Tier 1 ratio anywhere between 200 to 300 basis point, and hence the valuations of these entities can get impacted as well. Now, Macquarie has written an interesting note. They say that RBI seeks to safeguard the risk involved in project lending. From financial companies' perspective, they think that there are two implications. Number one, a provisioning requirement will go up for the lenders, affecting their profitability. And number two, these companies may ration the credit to project finance, be more selective, as well as raise lending rates, but further postponing the capex cycle recovery as well. Back to you.
Okay, got that. Thank you very much for the details there, both Abhishek and Ritu. We'll take this up with our next guest on the show. This and, of course, a lot more. Dinshaw Irani, CEO of Helios Mutual Fund, is with us. Dinshaw, hi. Great to have you on the show. Never a dull moment when it's the RBI these days, whether it's individual entities or, overall regulation. This is still a draft, as Ritu pointed out. But just your broad thoughts, because right now, banks, NBFCs, your PFC, REC, there's all the lenders are reeling under the impact. What do you make of things?
So, Surbi, very good afternoon to you and your viewers, and thank you for having me on your show. The fact is that the regulator, I think, is being more prudent, and he's, I think, trying to be a bit more cautious here, given the fact that these long gestation projects are normally the ones which become a bit wobbly around the time of high interest rates and stuff like that. So I think that's what is preempting the RBI to come out with these kind of new norms, though it's a discussion paper, but I'm sure nothing much may change at the time when it comes out as a final draft. The fact is that, as you rightly mentioned, all these project financiers will see their capitals getting compressed, provisioning going up, and stuff like that. So it's obvious that it'll be a bit more heavy on the valuations as such. Anyway, these guys weren't cheap, right? I mean, they were already rallying a lot. I think some kind of prudence is creeping into the market in these names, I suppose. So I'll leave it here, I suppose.
Dinshaw, afternoon. What about the private sector banks and financials? Any changes that you made to your portfolio? In the past, you've spoken about liking HDFC Bank, but there's so much happening with Kotak Mahindra Bank, for instance, right? First, the bad news, but now valuations are looking attractive. So talk to us how you would approach private sector banks and what are the changes that you've made to your portfolio, if at all?
So, Reema, actually, we've not done much in our portfolio on the private sector front. Even the new guidelines, I mean, the proposed guidelines by RBI don't impact them much because they're more of consumer-facing banks than really the project financiers as such. So we haven't done much here, but we've already been, as we've pointed out to you guys, that the major banks that we have focused on, HDFC is a big chunk of that, and we continue to be bullish on that bank. In fact, we are so bullish on the financial sector overall because I think with the one thing is given, right, that there's massive underpenetration in the country in terms of personal loans as a percentage of GDP and stuff like that. So it's obvious that the consumption, as and when it grows, it'll need a lot of financing and a lot of penetration. So that's why we're, in fact, so clear on this particular theme or trend going forward that we plan to launch actually a financial services fund focused towards this sector itself. It'll be a healthy mix of, and actually, you've seen that the financial sector is not limited just to banks. It's got a lot of other players too, NBFCs, market-facing players, gatekeepers, wealth managers, and stuff like that. So I think that is the area to focus on, and that's why we're launching this new fund.
Okay, interesting one. Hi, Dinshaw. Good afternoon and good to see you. And what about the stock market plays? The markets are seeing increased participation. Talking about under-penetration, well, participation in the equity markets has been growing, but still got a long way to go. And if that's the case, there are various plays, brokerages, wealth management companies, stock exchanges as well. I think in the past we've discussed Motilal Oswal as well as MCX. You can correct me if I'm wrong. But NSE as well came out with its set of numbers on Friday. And a lot of interest out there in the unlisted market. How are you all currently positioned? There probably could be another large exchange that list. BSE and MCX, as it is, have run up big time. And some of these other companies, Angel One, Motilal Oswal, you have Anand Rathi, they have actually done quite well. So your view?
So Nigel, actually, we agree with you. I think the stock market participation, though it's been going up, but still just scratching the top of the iceberg as such. You can only see some amount of participation. Actually, the bulk is yet to come. And if you look at the cash markets and the futures market, you see the wide difference, right? So it's obvious that very many people were more interested in speculation rather than actual investing. And that's where we guys come in, as in the mutual fund space comes in. This is where really the wealth creation happens for individual investors. And you can already see that in form of the way the SIPs have gone up. And that's actually a vote of confidence for the industry as for the way the SIPs have been moving. I think that's the way going forward. And as you rightly pointed out, there are quite a few components within the markets also. I mean, when you talk about equity markets, probably that's the end product, but they're wealth managers, they're brokers, there's the Demat account holders, the NSDLs and CDSLs of the world, and the exchanges itself, right? So these are the kinds that you would look at. And obviously, you mentioned NSE, the results were phenomenal. They did the numbers were fantastic. So obviously, we're awaiting, we do not invest in the private markets, but we are waiting some amount of, whenever the IPO comes, obviously we'll be one of the participants given the kind of valuation. I mean, if the valuations are attractive at that point in time. One correction I want to bring in is we filed for approval for the financial services fund. And as and when it comes, we'll be launching that soon.
Okay, all right. Just to take we take that correction on board. But in terms of stock market, the exchanges that you'll have exposure to, BSE and MCX, both of them, or was it just one of the two?
No, it's just one of the MCX actually, not
MCX.
BSE. Yeah.
Got it.
So, Dinshaw, that's a lot on the financial services side. Tell us, what else is exciting you and your fund managers right now? I mean, technology, we've seen the bulk of the earnings. There's no real sign of an uptick in the numbers or even in management commentary or body language right now. And then there's the consumer space. What else are you folks liking?
So basically, actually, the results season has been a mixed bag, totally. There have been some surprises on the upside. There have been lots of disappointments on the downside. I think the disappointment far outweigh the surprises. Fortunately, we've been on the side of surprises. I mean, we've seen at least the financial sector reporting numbers which have been taken very well by the markets. You saw what happened after ICICI Bank reported or HDFC Bank reported, and obviously all the other NBFC like Chola and all, when they reported the numbers, they were taken very well by the markets. The second space that we are looking at, and today, unfortunately today, that space has not been doing too well, is basically discretionary spends. Apart from tourism, which is mainly hotels and other sectors which are ancillary to tourism, I don't think other sectors have been reporting good numbers per se. So we'll have to wait it out there. Frankly, I mean, the way the liquidity crunch is there in the market today, demand also has taken a bit of a dip. And I think that has to pick up at some point in time. But I think these are the sectors which will do phenomenally well once we start going back again.
More on this consumer discretionary, where looks like a bit of a pause in the kind of uptrend they were reporting. What else have you observed, and what would be a good entry opportunity? How long will this weakness last that we're seeing?
So basically, Reema, the fact is that I think this quarter of June itself again is going to be a bit more disappointing quarter, given the fact that elections have taken up almost half the quarter, will be taking up, half the quarter. And then the results will come out, and obviously people will anticipate a budget after that. So the June quarter itself, I don't think is going to be that exciting again. Maybe slightly more worse off than probably the March quarter numbers, which will be seen by the end of May. I think all the numbers will be reported. So these two quarters, if you let go, probably from there on, you'll see some kind of once the budget also is out of the way, basically, you'll see some kind of an uptick again happening in the markets as such. So that's why we've been fairly cautious in our space. We've been fairly conservative in our investment strategy and fairly picky too.
Just last point on consumption, Dinshaw, and I'm talking about staples FMCG now. I don't know if you had a chance to hear the Britannia commentary. Now, A, Britannia posted 6% volume growth, which was better than expected this quarter. And B, the management is claiming that things will pick up. They see a revival in demand and, they think their market share will increase. Do you share that optimism on, consumption at the bottom of the pyramid? Because this is the one part of the market which has been a non-starter. Do you see a rally at some point in time picking up here? How are you positioned on this part?
So we actually, in the case of staples, I mean, basically the company you mentioned, they were lucky enough to see their raw material prices correcting a bit. And despite price cuts that they undertook during the quarter, they saw expansion in margins, mainly because of the raw material prices coming off. And I think that's what helped them. Actually, the cut in prices pumped up the demand, and obviously because of the volumes that took off, they saw expansion in margins. That won't play out for too long, right? I mean, the hope is that El Nino will kick in and monsoon will be great and stuff like that. I think that is what is playing on their minds. By the way, most of the companies that came out with the numbers, they also said that we're looking at good numbers, but probably be more back-ended in the year than the front-ended one. So I think everybody's hoping for a good monsoon, so are we. And once that comes in, I think things will normalize much faster than what is happening now.
Okay, all right, Dinshaw, always a good chat with you. Thanks a lot for stopping by and filling us in with your view. We look forward to chatting up with you soon, and keep us informed with regard to the new funds and the approvals you're getting. I believe some of those funds have done well already from launch. So good on you all. Investors are happy, and we look forward to chatting up with you rather soon.
Thank you, Nigel. Thank you.
Well, for the time being, let's take a short break. As always, when we come back, Nimesh will be joining in to tell us what he's picking up in terms of dealing room action. Later on, we'll get you some technical picks as well. You don't go anywhere. Welcome back. Well, as promised, let's go across to Nimesh. He's joining to tell us what he's picking up on D Street Chatter. Nimesh, take it away.
Hi, Nigel. A sharp sell-off in the PSU stocks. And in fact, there has been not a single sign of any recovery in the PSU basket in today's market. The index is down more than 3.5%, largely led by the power finances. Both PFC and REC are the biggest losers today. On top of it, the PSU banks are under pressure, largely on back of that RBI draft circular on infra financing. So that's one space which is under pressure. But broadly, I've seen there is profit booking across the PSU names in today's trade. I guess the election jitters and the earnings are going to keep the markets volatile, at least in the near term. So that's going to be this volatility for the next few days. But in terms of technical levels to watch out for, I've been saying for a while now that 22,400 is a first big support in the Nifty. We're trying to hover on those levels. So need to see if we take that support and bounce back. If not that, then the next level on the downside would be 22,100 from a technical perspective. But again, I guess while we spoke about the PSUs under pressure, in terms of flows, the two sectors which stands out in terms of buying interest, one is IT, so select IT names are seeing some buying interest today, and the other sector which has done well today is a bit of metal names. So a bit of pullback in the metals, private metal stocks, largely on some bit of buying interest. But broadly, there has been across the board selling pressure and profit booking in the PSU basket today.
Okay, and what about stocks, Nimesh? What have you picked up?
Well, so in terms of individual names, the first stock on my list is Sterling and Wilson. We've seen a big move on that stock post the QIP, where they raised funds. The stock is locked at 5% upper circuit today. And I understand the street is anticipating a large order win, largely an international order win for the company very soon. So that's something to track in Sterling and Wilson going forward. So that's the first name. The second stock is Jindal Saw. It's been buzzing in today's market, but if you see within the mid-cap basket, why today the stock is up 45%, and it's been a good outperformer as well. At these levels now, I understand there's going to be a large block deal in Jindal Saw very soon. So that's the second name. The third stock is March Financial. That's been consolidating of late, but the buzz on the street is that maybe the company is likely to raise funds via QIP very soon. So that's something to track in March Financial. And the last is M&M. Within the large cap names, this is one stock which stands out on back of very strong buy flows. Expect high delivery volumes and some bit of FI interest is back in M&M at these levels.
Okay, we've got just 1 second, Image. I want to talk to you about Deepak Nitrite as well, but Marico numbers are also flashing on the screen. 320 is what they have done on the bottom line, and the revenue more or less absolutely bang in line with the poll actually. So it's looking good. Let's just get that margin number as well.
Even Marico gives a cheat sheet, right, as Mangalam indicates, so that perhaps
EBITDA in line as
explains
well.
where the numbers are largely in line with expectations.
Yeah, and that margin number, well, okay, you can argue a couple of basis points here and there, but largely these numbers are in line. We'll try and get Mangalam in once again on more analysis. But before we let you go, Nimesh, today's standout brokerage report, that worked really well. Deepak Nitrite, it's been pushing higher ever since. So just a recap for us what the thesis is from Morgan Stanley here.
Well, so Morgan Stanley today put out a report with a double upgrade on Deepak Nitrite with an overweight stance and a target price of 29.85, a potential close to 20% upside from current levels. Now the key trigger why they've done this upgrade is because they believe that the company is in the midst of a multi-year investment cycle of $1 billion plus, and that would mean that the earnings can double by 2028. In the last decade, there has been 3 such instances for Deepak Nitrite where the stock have actually been 2x plus ahead of the earnings upgrade. So similar thing can happen according to the Morgan Stanley note this time as well for Deepak Nitrite, and hence a big upgrade on that stock. Even in terms of earnings, they've raised the earnings estimate by at least 3 to 7%, and they largely believe that the key triggers to watch out would be 1, the base earnings improving, 2, there are project starts up as well as the new investments which can kick in. So that's been the broad thesis on that big upgrade. Even in terms of balance sheet, Morgan Stanley note says that the balance sheet is quite pristine and much less levered compared to the global peers at this point in time. So that's important. Even the company's cost leadership has been quite remarkable, and the asset turnout is quite sharper compared to the other peers as well. And even in terms of valuations, now the stock is sitting at close to 19 times on FY25 estimated EV/EBITDA versus their historical averages of 25x and the last 3-year average of close to 22x. So in terms of valuation, there is a support. Balance sheet is quite pristine, and the fact that the new investment cycle can see a big re-rating, there has been a double upgrade, and hence that stock is of 5% in today's market.
Thank you very much for that. Rahul Mohinder is now with us for a few BTST calls. Rahul?
Well, a couple of observations. A lot of stocks individually continue to look good. As I said, my team is primarily bearish when I look at the Nifty index. So, heavyweights continue to be on my sell list, be it a Reliance, be it a a stock like, HDFC Life, like I pointed out earlier. But let's add a few ideas, which may not just be a tomorrow trade, but a couple of days. Bajaj Finance, probably heading to about 6,600. One could keep a stop loss past the 7,010 level. That could be a stock which dips lower. On the buy side, there's been, of course, a lot of talk about Godrej Properties, and technically that comes up a lot on my scanners just because on the bout of volume that it's seen also beyond the price breakout. So I think if you have a little bit of time, and this is not just a tomorrow trade, one could be looking at near-term targets of about 29.70, but you'd have to keep a stop loss below 27.50. Another stock which comes to light is a stock like Divi's Lab. I think this is headed to about 4,100 levels. Keep a stop loss around the 3,900 marker. That could also be a good buy stock at this level.
Okay, all right, got that. Thanks very much, Rahul. We'll leave it on that note for today. Thank you very, very much for joining in. We do have to take a break on that note. Come back on the other side with more on the markets. Welcome back. You're with us on Closing Bell. Those Marico numbers on your screen, and they have hit the mark as well. Let's get Manglam back in for more analysis. Manglam, what do you think?
Well, they're absolutely in line with what the street was anticipating this time around. I mean, 2278 crores on the top line compares with our poll of 2275 crores. No problems out there. The EBITDA as well, 442 crores. What was the street expecting? 445 crores. Nothing to quibble about in the margins as well. 19.4% versus expectations of 19.6%. And the net profit coming in at 320 crores. And the street is expecting a number of 337 crores. So no real problems out there as well. The only detail that we're awaiting right now is the volume growth. The street was working with a number anywhere between 2 to 3 odd percent, and that's what the company had said in their fourth quarter update as well, that they're seeing low single-digit volume growth. So anything above 3% is something that the street would like in an otherwise absolutely in-line set of numbers. You know, if you look at the India business as well, there was a mild dip in their overall revenue, 1680 crores. This compares with 1683 crores, but there has been a sharp improvement in the margins year on year as well. Gross margins have have improved by nearly 420 basis points, something that the company has been talking about earlier as well. And the EBITDA margins have increased despite them having increased their ad spends by about 50 basis points. Ad spends now are closer to 10% of sales as against 9.5% in the same time last quarter. International business, the Bangladesh vertical for them has been doing extremely well. So that's led the growth this time around as well. 7.5% revenue growth is what the company's reported there, with a 25% jump in the EBITDA. And international business also is margin accretive for them. So margins out there from 21% have jumped all the way closer to 25%. So those are good internals coming in, especially from the international end of things. We're awaiting some more details, but as of now, these numbers look like they're in line, and which is why the stock is higher.
Okay, thank you very much for that. That's Marico for you. Dilip Bhatt joined MD of Prabhudas Leeladhar is now with us on the show. Dilip, first wanted to get your thoughts in on Titan. Now, Titan was the darling, quarter after quarter reporting very strong numbers. But this quarter's numbers have raised an alarm on competition eating into the company's margins, and it may not just be a one-quarter specific issue. It could be prolonged. Your thoughts on Titan now, and what would you do if you have Titan in your portfolio?
Surely. I think one quick look at the results, and it's very abundantly clear that the margins certainly are coming under pressure. And I think as the prices of gold continues to go northwards, I think the buyers of jewelry will certainly look at the cost of making, which is what effectively decides the margins for all these companies, especially Titan. So I think that will come increasingly under scrutiny, and possibly that is where a lot of these companies will have to give a discount. So going forward, I think the margins will continue to be under pressure is what I would say. I think difficult to imagine that it will go up. But I would say that the stock from here can remain range bound, but certainly it will still form a part of the core portfolio. I don't expect anything great happening in the stock over the next 8 to 12 months. But as a part of my core resilient portfolio building up, I think Titan would form a part of it. But otherwise, these results are something which says that the next 3 to 4 quarters will continue to be challenging in terms of the margins and definitely in terms of the bottom line.
All right. Hi, Dilip. It's a Monday, but I wanted to ask you about these alcohol beverage companies. You know, they seem to be having a good run. United Spirits is flying away. We're talking about the markets being wobbly. Take a look at United Spirits. That's up and about. And I put out a brief piece, why these stocks are outperforming. Last week, we had Rampur that launched a whiskey that cost 5 lakh rupees per bottle. And still all those 400 bottles got taken off the shelf. So premiumization, cooling off of input cost, as well as stable taxes, it seems to be driving some of these stocks up. What's your view between United Spirits, United Breweries, Radico Khaitan, you have Sula, anything you like from there?
Nigel, I think this industry, with all its volatility in whatever is happening in terms of the policies that really impacts this particular industry, the spirit industry, I think this industry will continue to be in the limelight. In my opinion, you will have quite a few Radico Khaitan, United Spirits, maybe Sula also, all being on the radar. But I would still say that given the nature of the industry and the kind of complex policies that exist, one would try to play safe with somewhere where you are much more comfortable with the corporate governance. I'm not telling anything otherwise about anyone else, but I think United Spirits certainly stands out much better in that sense. So I think one cannot expect anything really great happening in terms of the profitability in the short run. But certainly this industry merits a look, and possibly United Spirit is one of the shares which can really stand out, possibly over 15 to 18 months can give a good 20-25% return. But I think the performance will keep on increasing. And if you have seen United Spirits, I think the cash flow certainly makes a strong case for this particular company to buy.
Okay, so that's a thumbs up on United Spirits. By the way, I just want to point out that it's not only Godrej Properties, but a couple of other real estate stocks are also doing pretty well. Despite today's difficult session, look at Prestige Estates, 6.5% up on Prestige. And Sobha, last I checked, was also up about 5% thereabouts. So Brigade Enterprises 8% now. So actually real estate is doing really well. Not just a mild outperformance, but some pretty smart moves coming in. Pull up Brigade, which is up about 8%. And then the 10% move on Godrej, of course, which we have discussed. Dilip, hi, good afternoon. So what do you make of things? I mean, real estate anyway has had a good run. How do you find the numbers so far? And would you take fresh exposure now to the realty sector?
Sure, I think this is one sector which we have been bullish on now for some time. And Surbi, if we just see, I just take a mix across various cities, the launches that have happened, whether it's done by Godrej, whether it's done by DLF, whether it's done by TARC, or whether it's done by Prestige or anyone else, we are seeing the kind of the pre-sales that is really happening. That augurs very well for the real estate industry. That is one. And more important, and possibly the most important part, is the cash flows seem to be improving very dramatically for all these companies. So that putting to rest all the questions on the debt that these companies possibly might be having, they are also declining very sharply. So I think the cash flows are something which is what is inspiring the bullishness. And possibly this sector will continue to see a good upside over next at least 18 to 24 months. So I think one should think about buying some of these stocks, whether it's DLF, whether it's Prestige. I would say in the mid-cap, something like a TARC looks pretty interesting for us. Anantaraj also is one of the stocks which is doing very well. And what I mean is very strong in terms of the cash flows, which really augurs very well for them to undertake further development of the projects.
Dilip, we leave the conversation, coming to the close of today's trading session. It's a flat close on the Nifty and the Sensex, but off significantly from the morning highs. We had a gap up opening of 70-80 points, and that hasn't sustained. Midcaps under pressure. The midcap index down over 1% with a negative advance decline ratio. The Nifty bank was absolutely flat, but that's because the large cap private sector financials, whether it's Kotak Mahindra Bank leading from the front or ICICI HDFC Bank, they managed to close up in the green, but the PSU banks took a hard hit. The Nifty PSU banking index down 3.5% on RBI's draft norms for infrastructure financing. And other than that, it's Britannia, which deserves mention. Britannia up close to about 7% on the back of the numbers, and they'll hope that the company may hit double-digit volume growth in FY25, and Titan on the way down deserves mention, 7% gone there.
All right, let's pull up a few stocks on the broader markets that did quite well. Sarla Performance, the stock was up close to around 13%. Some of the top volume gainers as well in today's trading session. Anup Engineering is another stock that did pretty well in today's trade. You had Rainbow Medicare as well. That stock as well did do quite well. And EIH Associated Hotels, well, that stock was up and about. And Car Trade Technologies, well, that one came out with a set of numbers, and that one as well did pretty well. So quite a few stocks actually from the broader markets that did do well. Anup Engineering, you had Car Trade, EPL, all of them up and about. Well, for the time being though, we'll have to wrap up on this edition of Closing Bell. You don't go anywhere. Markets Forward comes up next. The Sensex and the Nifty end flat after a volatile session. The Midcaps underperform. Volatility index hits its highest levels in the last 52 weeks.
Kotak Mahindra Bank perks up on a strong quarterly performance, even as the RBI curbs could impact pre-tax profits by 2 to 3% in FY25. Britannia gains after a steady quarter, but Titan shares decline as competitive pressures impact profitability.
Shares of REC PFC tumble after the RBI proposes stricter rules for project financing. The draft rules seek higher provisioning in the construction